you ready for some cutting-edge information and analysis on all that's happening in India's real estate market? Well, that's what The Real Deal is all about. Every week, we will capture the big news and decode it further to get to the bottom of the real issues and the changing market dynamics. We kickstart with India's once most vibrant real estate market, the National Capital Region or NCR, and the panic created by one of the NCR developers, which is Supertech, which has got downgraded to junk by Brickworks following the failure of the company to service its debt liability. Now, the big question everyone is asking, how much more is buried beneath? Today on The Real Deal, we look at the stress, distress and the opportunity in India's NCR residential market. Let's put things in perspective with the basics of this market. This is a report collated exclusively for CNBC TV18 by Anurag. We start with launches in NCR as a share of the top 7 cities of India, and now top 7 cities have most of the residential market. That has dropped for NCR from 24% in 2015 now to 15%. That's new launches. Now come to the absorption of what home buyers are really buying in this market. The figures follow a very similar pattern. From 25% in 2015, it's shrunk to 15%. The shocker though comes in this next table. You will see the unsold inventory as a percentage of top 7 cities. For NCR contributes to the highest and a whopping 28%. That's a middle column for you. 1.9 lakh units we've already talked about. But look at the slow sales. It will take up to 58 months or almost 5 years for this inventory to get sold. Let's take you to the markets where there is maximum supply, because NCR is not a uniform market. There are multiple micro markets in it. Gurugram has seen the maximum supply, followed by Greater Noida. So Greater Noida, despite being a slow market, has seen a lot of new launches. You also have Supertech, of course, exposed to both these markets, which is Gurugram and Greater Noida. Now, when I take you to the absorption, or which are the markets which have a huge inventory overhang, you take a look at it. Greater Noida seems to be the slowest selling market, followed by Gurugram. So it's just a flip here, followed by Noida and the other NCR market. Not only are sales slow, if you look at this price chart which is coming up on the screen next, it seems that the developers here have lost all pricing power. Look at that flat line. In fact, in some cases, it's been a slight dip as well, whether it's Gurugram or next market, which is Noida, to final Greater Noida, Faridabads, which are at the bottom here. These lines have simply not budged in the last 3 years. Seems that all the cost, whether it's RERA compliance cost, the GST or the rising input costs, all have had to be absorbed by developers, which means that the margins are eroding further. Yet when I show you the next chart, you'll see a very different picture. The big boys are stepping in. There's Kalpatru, there's Godrej Properties, and look at what they're charging. 12,000 in one case and 10,000. Those are 100% margin, premiums to the existing market prices. These are other launches which have happened. 12% premium here. The Tata Housing, probably the only developer which is not charged a premium and has actually launched at very, let's say, reasonable prices. These are great micro markets with great connectivity. And what happens when a strong brand name with certainty of delivery steps in? Well, it can charge a premium. So that's how the market is shaking out or shaping up. These are joint developments or land parcels brought from distressed developers. Even a reputed local developer like ATS is able to charge a clear 10% premium in Greater Noida West, where others are struggling to sell at 3,500. Okay, but we've already come to this chart, which is NCR developers in distress. Now, these are names which everyone knows. They're in public domain. Unitech, JP Infra, Amrapali Group, SRS, Premier, Ramprastha. Pretty much these are the tough ones. So let's take you to the ones which have big books of debt. Now, 2 names that you know of, Supertech and Vatika. These are the 2 big developers who have a huge loan book. If sales don't pick up, these are the ones markets fear could start defaulting in a big way, and their loans could turn into NPAs. But there are smaller ones as well, not in the radar of the financial markets, like Anantraj Group and Logix. If sales slow down for them, even these are the builders in trouble. The next one is a list of builders who have realized they cannot raise the capital needed to develop but are ready for joint ventures or outright sales of their land parcels. And look at the big names. There's IREO, there's EMAR, there's also Lotus Green, which we've already shown you has done several joint ventures with the Godrej Group. The 3C company, severely delayed projects, companies in distress, trying to find someone to come and bail it out. And you have BPTP, which has already sold one of its land parcels to Shapoorji Pallonji. That's the big picture. Let's decode these numbers and tell you what is the real stress in the NCR market and what is the opportunity. Anuj Puri, Chairman, Anurag Property Consultants, Venkatesh Gopalakrishnan, CEO of Shapoorji Pallonji, and Sanjay Dutt, MD and CEO of Tata Housing Development Company, join us today. Anuj, the report is yours. So let me come to you. Sales incredibly slow. Now, we've shown that the big boys are stepping in. They, however, own today, currently, less than 2% of the NCR market. Rest of the 98% are the big worry for either banks or NBFCs. How will developers service their next installment?
So, Manisha, you've covered it up very well. It was at one time the most vibrant market. I mean, you started with 25% of the overall sales. If you were to move backwards to 2010 and 11, it used to be actually 50%. So it is coming down from 50% to 25% in 2015 and then has now moved to 15%. So clearly from the best market in India, it, I would say, has become perhaps the most challenging market in India. I think there are three reasons for that. One, there were a number of developers who did not have necessarily the financial wherewithal to be able to take very large projects. Second, the environment in NCR from the authorities was very translucent, and hence anybody who had an ability to be able to get in the approvals, they were the ones who were the heroes. And that's why you see the Bombay developers or the Bangalore developers had not entered that market. And third was huge amount of speculators in that market, which post the demonetization have really disappeared. So clearly from a big opportunity getting into a concerning market, and how it is going to get bailed out is absolutely correct. The way that you are saying is that there is going to be mass consolidation that is going to take place, where you will see larger corporate developers, like Venki from Shapoorji Pallonji or Sanjay from Tata Housing or Godrej. You will see a number of Bangalore developers starting to come in, Prestige, Purvankara, Salarpurias, RMZ, all these guys, because today it's becoming a level playing field. No more the authorities are translucent in their approach, and hence today they are going in doing development management with these developers, doing joint venture, joint development. They are not buying land even today. They are largely doing this joint developments and saying is, we still find that the market is vibrant for the end user. Let's get in there and bring corporatization, which in the rest of India was already there. Barring a few players like you said, ATS or DLF or LDCO, a few others, there was very mom and pop guys. These were brokers who had turned into developers. Also, what the Noida authority did, where they allowed 7-year payment over land. You had people with 1 crore, 2 crores who had become developers who speculated on land and said is that we'll come in, we will start to do pre-sale. Through the pre-sale money, we will be able to sell that. I think those are the ones which have created the disaster in the NCR. I do feel is now you will have stability with the corporates, and those who will survive in the NCR market on the other side of the tunnel. I think, Anuj, you're calling the stabilization way too early. I mean, look, this industry has been round-robining debt. We all know about it. And, it's a practice amongst PE firms and also NBFCs, Now it's done the time on my books, why don't you take it? We all know that's happened. It's all come to the forefront after IL&FS. My question now, and this one is for Sanjay Dutt, entire industry has been churning debt. Estimated roughly around 50,000 crore upwards. I mean, especially for developers who do not have an annuity income. How many sweet deals are you guys getting today in the NCR market? Is the distress over? Is the stability something that's going to come up? Or
are we going to see a much bigger bloodbath?
Manisha, it's a tough question to answer. My take is the markets are bad. However, in the recent past, all those developers who quickly aligned themselves to affordable products for end users, they have done extremely well. Tata Housing has seen close to 15% increase in sales in recent past. You can attribute to many aspects in the market, but overall, if you have a product which is ready, where the customer feels confident and the brand is credible, and I would like to make one qualification. While brands like Tata's and Godrej are very credible and they're well established, there are a lot of local brands who are equally well established, and even they are getting traction. So market is clearly differentiating the ones which are credible brands, the ones who are not. To answer your question more specifically, whether there is more to go down before the good times return, the answer is yes, I agree with you. At one time, Manisha, you only wanted to see the headline reduction in capital values 4 years ago, 5 years ago, and you say, Sanjay, when will the rates will come down? Well, they did come down, but they brought down many other things along with it, and a lot of NBFCs who actually lended money at very high interest rate, that music and the party also stopped. So obviously, like any other sector, this sector is also going through a consolidation, and there may be some more consolidation at the anvil now before actually stabilizing. My take is that it will still take some time. But at the same time, we have now data on right product, right location, right profile of customers, and we're seeing traction there. Okay. So definitely, we are very hopeful that there are opportunities for developers who are credible.
Definitely. That's why we are calling it stress, distress and opportunity. Venkatesh, opportunity. 3 projects, Delhi NCR this fiscal. Total construction of over 6 million square feet. Run us through some of the dynamics. I mean, what I'm hearing on the street is that you're scooping in FSI very, very reasonable. It's half of what it used to be 2 or 3 years ago. Yet, when we look at the capital value reduction, it's not visible in the pricing from either a Godrej or a Tata, and even probably Shapoorji, or you can, argue otherwise with me.
Yeah, so Manisha, I think we have been looking at this market for the last 5 to 6 years, and it's only now that we have ventured into 3 projects, as you said. We were very conservative and very cautious, and we thought that the market was quite overheated. The land prices which we were being offered, I think at those land prices we did not see any transaction or any deal happening. But what happened, especially over the last 2 to 3 years, is that the land prices, the FSI cost also started softening, and that made us a little more interested in looking into this market. And therefore we have now gone ahead and we are committing to 2 to 3 projects. I think if you pursue fundamental end user demand with a product which basically has an aspirational level of amenities, I think people will buy. And on the issue of premium, I think getting a price premium in a market which is oversupply, a large overhang, is going to be difficult. If the corporate players get a premium on velocity, what I mean is that, let's price it at the market or a little more than the market, and let's have a good launch. Let's sell a reasonable amount of stock in the first 6 months. I think that will be much better than commanding a price premium, and that's what Shapoorji Pallonji's thought process is. And fortunately, we feel that we've been able to get the land and the deals at the right price, to price it in a manner that we will get the velocity on premium.
Can you run us through how you've priced both the Joyville project, which is near Dwarka Expressway, and your other project, which is under RERA approval? What sort of pricing are you looking at, Venkatesh?
Yeah, so I think right now as we speak, we are trying to fine tune the price per square feet, but I can talk about the ticket sizes. The one at Sector 102, the land which you mentioned we purchased from BPTP, we're going to have 2 BHKs and 3 BHKs and some amount of 1 BHKs, and all the stock is going to be under 1 crore. it's going to be from 60 lakhs to 90 lakhs. That's the kind of pricing which range which we are looking at. Obviously, no variation in the per square feet price is just because of the sizes of the apartments going up. And the second launch which we are going to have in Sector 150 Noida, which incidentally is a development management, and we're having good views over there on a potential golf course, will also be in a similar range, Manisha. So I think if you keep the product price below 1 crore, I think that is where you will get maximum amount of traction. Of course, below 50 lakhs you will get greater amount of traction, but you know, the amount of compression in the margins is something which you know, you'll have to deal with. All right.
So you're saying price the product right and there is no reason why you will not have a buyer. But well, the market is facing a new dynamics altogether. There is a liquidity crisis we all know about. We also have now a sentiment fallout with stock markets going down, or let's say falling dramatically. There's also election uncertainty. Now there will be big opportunities for big players who have the appetite. How much is the appetite looking at the new norm of the NCR market is something we'll discuss on our way back. You're watching The Real Deal, a show that breaks down big numbers and big moves around the week's big news. So, getting to the bottom of hot opportunities in India's real estate universe, today we are looking at the NCR market. Venkatesh, we were speaking right before the show. You said finally you're getting deals on the table which are priced right. My question to you is there any worry at all in terms of velocity of sales looking at the new liquidity crisis? I've heard for ready projects, banks like SBI have now stopped funding. They're saying no more home loans. So for under construction and subvention schemes, it's become an extremely hard market. How soon will we get out of this?
Yeah, I think, Manisha, that's a valid point. If the banks are looking at home loans with a cautious eye, it's quite natural that the residential sales will slow down. But I think at the end of the day, the fundamental crisis is something which is, in our opinion, transient. If we are looking at players who are looking at fundamental demand, looking at product quality, looking at product timelines, I think the banks are also looking whether they are providing corporate loans or home loans to the developer to deliver on his promise or his commitment. So we feel that yes, it's going to be a bit of a dampener, but I don't think that over a period of time this kind of volatility in the mindset of the banks, especially vis-a-vis home loans, will last. Okay. So if you're looking at the near term, let's say next 1 month, 2 months, yes, there could be some kind of dampening effect, but if you're looking at 6 months, 9 months, I don't think that should be an issue.
All right. Sanjay, in fact, I'm very surprised that, you know, banks are taking such a cautious approach on home loans. That has traditionally been their safest portfolio. So you agree with Venkatesh? It's a short-term sort of nervousness and, you know, 30 days, 60 days is maximum we're going to see. It's scary. I mean, as it is, you have very little funding going in for under construction flats, specifically from home buyers, and now you have a situation where banks are saying, look, we are very cautious about lending to projects that we are not 100% sure about.
Manisha, I agree with Venkat, and I have a similar concern. I think the whole financial sector is aware of the exposure they all have together with NBFCs, and they've been to this party before. They've lended money for construction at 9 to 15% in the past. Then the NBFCs enjoyed the party with the same projects at 20% and 18%, some even higher. So one project cannot give you these kind of, you know, returns. So obviously the banks have taken a precautionary approach, and it's the right thing to do, especially at a time when there's so much of shake-up on the NBFC. Okay. But I think
so. The other important question, Sanjay, I'm sorry I'm interrupting you because we're running out of time, and this is an important question. When do you think big players like you would be ready to look at new opportunities? How long are you going to let this market, give it some time to breathe and settle down? Because they will come to you. It's a question of, will you take more exposure to NCR market if you get great deals?
Manisha, we are already 7 projects in NCR between commercial and residential and various price points, and we are looking at least 2 more projects and 1 relaunching in Noida sector 150. So we are definitely looking at it. However, while the valuations and proposals are plenty and valuations are attractive, the actual cost of capital construction, labor, steel, all has gone up. So land may be available and cheaper, but overall it's still a very fine line, and we want to be very cautious and careful. We want to pick up the best and go with a conservative view on the market.
Okay, conservative view. Let me bring in Anuj here. Anuj, turbulent times, huge opportunity for strong players in India's residential landscape. NCR is a true, let's say, test of anybody's mettle. How do you see? Give us a 1-year outlook for NCR.
So clearly Manisha, tough times. I mean, there's no doubt about it. Nobody can say this is not a tough time. I mean, there are 2 parts to the question that you earlier asked. One is the retail home loans. I mean, I had never expected that retail home loans would slow down. I mean, that is, breaking the, camel's back. If that continues for a sustained period of time, I'm also hopeful, like Sanjay and Venki, that, in 30-60 days that will go away. Otherwise, that can become a huge dampener for recovery of this sector. But the second point which we did not cover is really the lending to the developers. The equity that was available, Manisha, and the revenue that was coming from the pre-sales was insufficient to be able to complete the construction, and hence that was being filled up by NBFCs. Now suddenly the NBFC is also not giving the developer the construction loan that they had agreed earlier. So there is a financial closure of a product that had happened, and suddenly that financial closure has opened. So I do feel that there is going to be an issue there as well if the funding from the NBFCs does not continue to the wholesale side, which is to the developer for the construction, because clearly equity and pre-sales is insufficient at this stage to be able to complete those projects. So I would say is that this really, the crisis needs to be sorted out quickly, and if this continues maybe for 2 quarters, I think there will be very large consolidation, and certainly in the NCR you will see a huge amount of consolidation. However, my thought is that the RBI and the Finance Ministry and the government must be looking at this very carefully and saying is that we need to do something to be able to enable the retail home loans to come in, and equally the funding from the NBFCs to the developer, at least for the construction.
I do hope, Anuj, I mean, let me wrap out here. We've run out of time. I do hope RBI wakes up to the funding requirements of developers. I mean, that's always been a sore point for developers. They don't get money for land. It's always expensive. There's an opportunity, but probably a much bigger bloodbath if things are not taken under control. Anuj Puri, Venkatesh Gopalakrishnan and Sanjay Da, thank you gentlemen for joining us on The Real Deal, and hope to see more of you on the show as we decode all the big stories and the big news in India's residential and real estate landscape as a whole. Goodbye and thanks so much for joining me.